A jam-packed show, but we will be focusing in on results before we take on board all of your viewer queries and fill you in with top trading ideas. PNB Housing has put out an NII growth of 52%. Net NPAs have come in at 0.27%, with the NIIs shooting up about 40%. We have the management, Sanjaya Gupta, Managing Director, with us on the show. Mr. Gupta, thank you for being with us. And start off with asset quality, because the stress seems to have increased a little bit in Q3. Can you just tell us what you would attribute this to? Is it pretty much demonetization?
So one thing is that our gross NPA numbers are 0.37% if we take the 60 days grace up to loan amounts of 1 crore. If we shave off that sort of grace period which has been given by NHB, then it comes to 0.43%, just a 5 bips over, the previous number that I took. So I don't think, there is any sort of a stress that we are foreseeing or forecasting. On the demonetization front, what happened, that the bounce rates or the delinquency rates increased in the month of November because, people were in a little bit of a flux of redoing the business models. But by the time it was December, they resettled and, it was business as usual, and our delinquencies and our bounce rates came to the same levels as pre-demonetization era. So I think that shall continue, and we will not have another bout of what we saw in November coming forth in our way forward.
So how do you see asset quality shaping up going forward, especially as concerns about the LAP book remain? And what is the outlook on asset quality within the developed loan segment?
Okay, so one is that you are talking of two product categories. One is loan against property and the other one is the developer funding. So I will sort of, bifurcate it and address you. On the LAP book, as it is not a regulated product, the imagination of the product managers and the credit managers is free for all in the industry. We are very conservative. Our ticket sizes are just about 50 lakhs. Our LTVs at origination are about 46%. The age bracket of our customers is between 44 and 54. So that means that they are, second generation entrepreneurs or having experience of 10 to 15 years in the business that they are doing. And our LAP book is performing fantastically well, and in fact it is giving us no sort of reasons to be anxious about. So it is a very stable LAP book. Coming on to developer funding, I'm happy to sort of say that as of 31st of December 2016, we have zero NPA on that portfolio, which is about 11% of our total portfolio. So nothing to worry on that. And that is primarily because we choose the right developers and the right projects of these developers. We never go at the bottom of the pyramid, we never go at the top end of the pyramid. We always concentrate on mass housing, which still has a healthy transaction velocity and marketability, even in this sort of a sentiment which is at a lower ebb right away.
And what is your outlook on margins? How have yields shaped up, and how much benefit do you see flowing into the margins on account of the lower cost of borrowing?
See, the one thing is that we have not been borrowing over the last about 50 days because of capital infusion and because of a securitization of a pool of about 3,300 crores. We are going to, revisit the capital market or the debt market very soon, and the benefits of lower cost of funds is going to also come to our treasury. And I think, our spreads and our NIMs are going to be protected going forward.
Home loans rates have been cut significantly by competitors. How will this reduction in loan rates weigh in on your spreads, and how do you see spreads shaping up over FY18?
Okay, now, when you talk about spreads on a portfolio, you have to take the product mix also into consideration. So right away, we do about 62 to 63% pure home loans. We do non-home loans in the vicinity of about 25 to 26%, and we do about 11-12% of construction finance with this product mix, I don't think our spreads are going to be squeezed in the future, and especially in Q4. So I think that's pretty insulated going forward.
And your AUM growth stands strong at 53%. Disbursement growth has also moderated since the second quarter. Can you tell us what kind of growth and we can see, and what's the loan mix change?
See, one is that the AUM growth is at 43%, whereas the portfolio growth is at 43%, because we shaved off through securitization 3,300 crores. That was a capital restructuring that we required to do in the month of September and October, because of our IPO getting a little delayed by about 3-4 months. So that is why you see that delta between the two. But our disbursement growths have been 43%, and that is what we had planned, and I think we are going to maintain that sort of in Q4 also. So I don't think there's going to be much difference in our trajectory going forward. But I cannot make any forward-looking statements. It's a listed company.
All right, and lastly, what exactly are your own expectations on what the housing sector should expect from the budget?
Well, I think mass housing and affordable housing is going to be addressed in a positive manner, and that is where the sweet spot is, because the demand in urban centers or the delta between demand and supply still remains at about 2.2 million shortage of housing. So I think the government is going to address in a positive manner.
To go on that note, thank you, Mr. Gupta, for joining in and giving us a deeper insight into PNB Housing and the numbers declared. The stock currently higher by 2.5%.